Hello everyone, I'm Cyrus Hojadi. Today is February 8th, 2011. Today, or, you know, even this applies in the long run, I like to demonstrate about some broad financial trends that we're going to see over the course of months and of course in the course of years. Now, as you know, I just don't, give short-term, investment and financial advice. I like to give you broad trends, and a lot of people, especially my subscribers, are highly interested into that. So today, let's just discuss about the real estate market. Now, I hear a lot of people tell me, "Ooh, is this a great time to invest? Is the magic carpet ride, soaring above the skies again?" Well, let me tell you the truth. Based on the number of foreclosures that we're about to encounter, especially in 2011 and into 2012, real estate would be a terrible, terrible investment. Because remember, more foreclosures destroy real estate activity, and of course, as you know, it increased the supply of number of homes for sale. And of course, usually foreclosures, the more they are, the more they hit the neighborhoods, like the Central Valley of California, even in Vancouver, even in, gosh, the coastal areas of Florida, everywhere around the world. It really has a horrible effect in real estate values. And of course, based on the mortgages they're about to reset, option arm, and of course, here's the really, really devastating one, which will also hurt the job market too, the commercial real estate. It is definitely not a great opportunity to kick in real estate. And even if you're not looking forward to invest, you're looking forward to own home, just to have a place that, you're not so dependent on the landlord, still, it is not a wonderful place to jump in. Now, a lot of people are with mortgages are thinking like, oh, I don't have to worry about, oh, even if I keep my job, I'll still able to pay it off no matter how much I borrow. But this is the issue that many people fail to recognize when it comes to real estate. They fail to recognize that when it comes to owning a home, they forget other costs that are associated. What about the mellow roast, the homeowner association fees? What about property taxes? What about maintenance? What about utilities? What about the gas that is needed to, get outside of your, cul-de-sac tract home to get through the collector road, fill up capacity in the parking lots, and waste all this gas? And of course, waste all the, automotive costs, the maintenance, registration, insurance, car payment, potential for speeding tickets. Yeah, that has been going up recently. What about all these other costs? Shouldn't potential buyers be aware of the other costs? And and I forgot to point out about maintenance. What are you going to do about your home if you cannot, maintain, a leaky roof? Your carpets need cleaning. Your cabinets are damaged. That's going to highly, highly destroy your real estate values. And again, during these times of higher cost of living, our incomes may not be suitable to deal with these types of expenses. And again, I don't see real estate rebounding soon. And if they do, if they go up 10% the next year, what's the price of soybeans gonna go? 50%? What's the price of silver? 100%? So, even if they go higher, still, the real paper value assets are still going to decrease in terms of the real rate of inflation and, of course, precious metals. Now, some real estate in agriculture, if you're looking forward to live in a self-sufficient environment, that wouldn't be too bad. I also like to discuss about broad trends about the bond market. And again, I highly, highly do see a bond bubble in the, coming years. Again, a lot of these bonds, where the investors are relying on are going to default definitely. We're seeing tons and tons of crisis in the market, and of course the rates are, most likely going to continue to rise. And this is why I believe we're going to see a bond market bubble. And this is very, very critical for retirees. You know, uh, just in the last year, people bought so many more bonds than they invested in precious metals. And people are telling me, oh, there's going to be a gold bubble. Oh, this is just speculation. No, come on, look at the real facts. The bond market is being overheated. And even in the, in the stock market indexes, people don't realize it, but in terms of the real rates of inflation and adjusted for gold, the Dow Jones, NASDAQ, and even the Nikkei, even in the international level, a lot of these non-commodity related or backed investments are actually falling in value. They're actually being, depreciated in real wealth value. And that's the other thing that people don't consider. People just got to stop judging by their numbers and so forth. And even if they do fall in value, they will continue to depreciate paper money, and they will continue to, make sure that these indexes won't tank. Now, I do see some dips if, we see more defaults happening in the international market. So if we do see that there could be some major correction in Dow Jones and S&P 500, in DAX, and maybe even the Shanghai Composite. So, anyway, that's all I have to really demonstrate about the broad markets trend over the course of months and years. And of course, by the way, I also still advise that the commodity-backed 401k plans and IRA and savings accounts should be avoided heavily. And this is very, very important for those who are looking forward to build capital or save, especially for retirees. So I highly advise you to stay away from these types of plans. So again, if you want more from me, please subscribe, please spread the word, and please stay tuned. Thank you very much.